So Bitcoin is back under the 50% level of the entire cycle on the monthly time frame. And obviously, with 2 weeks to go until the end of the month, the monthly BX trender is still red. And if we do a quick bit of cycle analysis, you can see based on last cycle, when price broke under the 50% level for the first time, we saw a bounce. You can see here, we broke under the 50% level. It looks like we've seen a bit of a bounce. And after that, price is magnetized towards that 50-week triangular moving average, which for now is sitting at around 58K. There, I would expect another bounce and potentially another leg lower, which could take us, if we go into the smart money zone again, similar to last cycle, 35 to 39K. Now, if you watch Jason Pizzino's video today, you'll know that every cycle we do bottom slightly higher than the cycle before it, which makes sense as Bitcoin gets more mature as an asset and more money comes into it. It's not going to be as volatile. So even if something like that happens and we do see a low above the 786 fib level, I would still look at this 58 to 40K region for a potential bottom. Nothing has changed with my analysis there. On the weekly time frame, you can see I've turned on show bar type on the Gann swing indicator because last week was a pretty decent up bar. Unfortunately, that is not the nicest close on that bar. I believe it's around a mid-bar close if we have a look. Yeah, so we've pretty much closed bang on the middle of that bar. And this week so far is a inside bar because we have not exceeded 73.8 and we have not dipped below 67.7. And obviously, it's only a few hours into this week, about 5.5 hours or so at the time of filming this video. So we'll just have to see what happens. And I was initially expecting this week to potentially push higher and break this previous weekly swing top, as we saw something very similar to that happen last cycle. If I go on a little scroll over here, you can see in this little consolidation period here in March, April 2022, we got our higher swing lows and sort of got higher swing highs with the exception of this one in the middle before the market absolutely rolled over. You can see here in this period here in June of 2022, which I do believe we're more similar to right now because price has already come down to this -1 standard deviation band and we've touched it once already. And you can see last time when we touched it once already, we got our 2 higher lows and 3 weekly swing tops, each one slightly higher than the other before the market rolled over. So if we're going off this analysis, this probably lines up a bit better with Jason's video today, in which we're saying the low in price is probably closer than people think. So we may not actually get down into this smart money zone this cycle. Purely based off of the fact that we've already tapped the -1 standard deviation band. I think, this sell-off here from January to February was probably similar to that sell-off from March to June. And I believe we'll probably rally if we do come down and tap this -1 standard deviation band, potentially 57, 56K, something like that. We'll potentially rally and test this range low as resistance. So anywhere from, 60 to 65K. And after that, we might just pet out for a few months, which is sort of what Jason has been suggesting as well. Maybe we range between, 65K and 55K, and that ends up being low. But rather than get too wed to price targets, I'm going to stick to the technicals. And you can see on the weekly BX trender, we are getting green weeks. And the last time we saw 5 consecutive weeks of light green whilst price was trading underneath the 33 fair value band was right here in this period, the June period of 2022. You you can see after 5 weeks of light green, I'm just going to make this a bit bigger for you. We got 1, 2, 3, 4, 5. That 5th week pushed a tiny bit higher, and then it pretty much rolled over, which is pretty much exactly what's happening now. So in that case, you could argue that this cycle is just moving a bit faster than last cycle in terms of price. So rather than taking 1, 2, 3, 4, 5 swings to get to the high, we've done it in just 3, and we're ready for another test of the range lows and potentially a couple more rallies into lower highs along the way before we have that final flush out into the cycle low. And one thing to note is whilst the weekly BX trender in this period through all of July, August, September, October, November of 2022 was green, if I change it to the monthly BX, you can see it was still dark red. So even though there was buying pressure on the weekly, there was no buying pressure on the monthly, which means if you just bought and held based on the weekly BX trender, you would have gotten, an alright entry. You would have gotten in at, what was that? Roughly 20,700, which, 3 years later was definitely not a bad price to buy Bitcoin. If you held that for 3 years, in July of 2025, you would have been able to sell at what, 120K or so? Sure, you would have had to ride it through a 25% loss over the next, 6 months or so, but that's probably not a bad entry price, which is also what, Peter DiCarlo has been saying over at Traders Helping Traders. If you're a long-term investor on Bitcoin, anything around here, the $60,000-ish mark, is probably not a bad price to buy if you come back and look at it in 3 years' time. Sure, you'll probably not feel great if Bitcoin drops into the $50,000 or $40,000 range, but it's definitely better than buying up here in the $100 and something thousand range. But the other thing to note is if you were going to start a macro position, my plan personally is going to be waiting until the monthly BX trender forms higher lows, because in that case, even though I'll be getting in slightly higher at 23,500 rather than 20,700, I pay a 10% premium. However, that money is not tied up for pretty much an entire seven-ish months. So in those 7-ish months, you could do something else with the money. You could day trade it, you could whatever. And that's something Peter's been talking about heaps with the Traders Helping Traders community is, sure, you might get a slightly better price buying the dip rather than buying the breakout, but you tie up your money for so long, and most of the time your return is so small compared to just buying the breakout. So anyways, with that being said, I'm going to move over to the daily time frame for Bitcoin. You can see we have flushed out underneath the trend line, and that was our 4th/5th time breakdown trend line, which we managed to get back above it, but we've now dumped back underneath it. And obviously, if you've been watching Michael Pizzino's channel, you know that lined up very well with a whole heap of time pressure. And if you watch Jason Pizzino, he's got a massive trend line from the all-time high to the lower high, the dead cat bounce in January. And we've pretty much rejected right off of that trend line to perfection. And obviously, I was talking about potentially we coming back down to retest the $70,700-ish level if the daily swing turns down, and that is exactly what has happened. A couple guys over in the TIA Discord got in an absolutely monster short, using 100 times leverage. That would have been, very, very fast money. Obviously, that was a news catalyst. You had time pressure and you got the news catalyst. The peace talks weren't going to plan. And the market's pretty much stopped dead after that, big red flush out bar. We've pushed up a little bit higher today, but we've come back down to the open. So we'll have to see how the stock market session goes once the US market opens in roughly 8 hours time. And obviously amateurs control the open, professionals control the close, so I'm going to be very interested to see what the market close looks like in around 26 hours or so. And other than that, there's not much more to say on the daily time frame other than we have turned the daily BX trender down. And you can see the last time we turned the daily BX trender light green, dark green, we pretty much see a continued flush out back down to the next layer of support. And if it flushes, if it stays dark green and doesn't go into dark red for more than a day before we promptly reverse, then it's likely to be a higher low. But if we see consecutive days of dark red, then there's a good chance that these lows here will probably be taken out, and we will potentially come back down to retest this diagonal trend line in the smart money zone, which lines up pretty well at around $63,000. Now, Michael has put his video out today, and he's pretty much saying that if we start to see weakness under this 50% level of, not the 50% level, of the point of control, which lines up very well with the monthly 50% level, if we start to see, continued price action in the form of closes or lower highs under that level, we will probably come back down to test the $66,000 support zone, potentially the $63,000 level, and potentially even going through that $60,000 low. So Bitcoin is not looking great right now. I know everyone got super excited through here, but I was very, very cautious, and it looks like my caution has paid off. My short position has made a decent amount of money. I do regret not adding to it on the breakdown of this bar low, and I ended up getting my long stopped out for pretty much break even. I obviously took a whole bunch of profits through here, but I still had, around 30 something percent of the position open, which was a shame. I gave back, all that profit, but it is what it is. And over on the 4-hour time frame, you can see I have completed my Elliott wave structure since we broke out of that diagonal trend line, our little 4th time breakout and retest. We got a 1, 2, 3, 4, 5, and I was pretty right in that the wave 4 was going to be more of a sideways chop since we saw such a sharp corrective wave 2. That wave 4 just validated Elliott wave structure. We came in very close to the wave 1 peak but didn't actually touch it, and unfortunately we did not see that extension in the wave 5 that I was thinking we would be getting since we got such a bullish wave 3. But it is what it is, and it looks like we're potentially setting up for a ABC corrective pattern if we're excuse me, going to be bullish, where we could get something like a ABC. And in that case, we would be expecting another 1, 2, 3, 4, 5 leg up. If we look at this entire thing as a wave 1, a wave 2, 3, 4, 5. Now, obviously, that is not drawn to scale because I've run out of space, but if we were looking at something like that, which is not entirely out of the question, because you can see this entire bear market, we still haven't retested the underside of this 33 fair value band / market bias, which we did, I believe, yes, we did it, once on a closing basis last cycle and a couple times on a wicking basis, but we have not done it at all this entire cycle. So, a wave count like that is not entirely out of the question yet. However, if we, as Michael always says, if we start to see extension to the downside, in which case we see something, whoops, I'll just clear this for a moment. If I go hide, if we start to see some extension to the downside, in which we see a 1, 2, 3, 4, 5, if we get a 5-wave structure to the downside, then we will probably have to reevaluate this entire wave count, in which this would be a 1, 2, 3, 4, 5. Now, obviously, that is absolutely not accurate. That does not fit Elliott wave structure, and I would probably have to move that around a bit. But this entire move up could probably be seen as a B, C correction, in which case we would probably have not just one, but probably 2 more legs down on the 4-hour time frame, which could potentially take us to our cycle low price if something like that plays out and we see another A, B, C correction before we see another 1, 2, 3, 4, 5 to the downside. And this entire structure would be a wave 1, 2, 3, 4, 5. Now, obviously, I'm getting many steps ahead of the market. So for now, I think it is very important to track the 4-hour time frame and see just how this structure here plays out. We are closing consecutive candles underneath the 4-hour fair value band, which, if you see historically in this range, when we see a green fair value band, price is trading above it. Once you break underneath it, start to close multiple candles underneath it, price will usually come down to retest the -1 standard deviation band a couple of times. And currently that sits at around $68,000. And one other thing to note is the -2 standard deviation band is just underneath that $66,000 support level. So I think it's not entirely out of the question. Sorry, not entirely, should I say, wild to say that price, if we cannot get sustainable price action above this monthly 50% level at 70,800, if we keep dawdling underneath it, price could capitulate again all the way down to this -2 standard deviation band, which would line up with our $66,000 support level of both volume and previous lows on the daily time frame. So that is definitely something to be watching. I will be looking at taking short profits around 69K and aggressively taking short profits around 65K, because you can see historically when price starts to hit that -2 standard deviation band for the first time, it typically leads to a bounce. And that bounce is typically lines up pretty well with the -1 standard deviation band or the fair value band. And it pretty much comes right up to the range lows and pretty much confirms Wyckoff distribution. And obviously, in a massive capitulation, you can see price can keep testing the -2 band, bounce up to the -1 band, and obviously you get your final flush out. So that is definitely not out of the question, but for now, since price is still curling upwards, the bands, I do believe we'll probably chop sideways a bit, maybe drift down to the -1 band, test it a few times, because I don't think we're going to get our capitulation sell-off until these standard deviation bands start to turn downwards. That is typically your warning sign. See, price broke down, we hit the -1 standard deviation band, price kind of consolidated underneath the 4-hour fair value band, we grinded lower, we had a few rallies that got sold off pretty aggressively, and the standard deviation bands curled down, and then it's pretty much capitulation. So I think something like that could definitely happen, which is why I think the 4-hour time frame is so important to watch right now. You can see on the 1-hour time frame, we've been rejecting off the underside of the 50-hour TMA, and we've been printing, hidden bearish divergences. Obviously, being a 1-hour time frame, every sell-off is only a couple $100. If you're on, MEXC trading zero fees on 100 times leverage, could be some profitable moves, but for now, I'm not touching the 1-hour or 15-minute time frames much. I'm mostly watching the 4-hour time frame and only using these shorter term time frames to kind of get a gauge of when I think the major breakdown will happen. But I do believe confirmation of that major breakdown is going to come on the 4-hour time frame. Now, if I come over to CoinGlass, you can see the long-short ratio has been pretty strongly biased towards the short side for quite a few, not quite a few days, for about a day now. And we haven't actually seen much of a snapback reversal. We've gone up about not even $1,000 from that capitulation low. So it is possible that we get a retest of the underside of this trend line of around 72, 72.5, maybe even 73k, depending on when we get up to there. And if we do get that daily lower high and the swing turns down, that would be a very bearish sign, especially if in that next downswing we cut straight through the 50-day TMA and we get 3 daily closes underneath it. That would absolutely be bearish. Now, we have been tapping this monthly max pain level, and I do believe if price continues to dawdle around here, the long max pain levels are going to go down. I would like to see those levels at around $66,000 because I do believe that will probably be the next level to the downside that price will be magnetized towards. And obviously, if we don't see any continuation downwards, a failed signal is a signal in itself. You could potentially argue that we're forming a bit of a head and shoulders. So potentially, if I draw my head and shoulders, you could potentially argue we see something that looks like this, where if we get a right shoulder up to the trend line, and that would obviously still be a bearish pattern, but based off of the fact that we haven't managed to cut straight through 70k, and based off of the 4-hour Elliott wave analysis, I think it is possible that we see a bit of a suckers rally right here. Even better if it's on low volume, as that's one of Michael's favorite signals. So we'll just have to see what happens. Obviously, if we get a straight flush out to, the 50% level or 66k, 63k, with the US stock market bleeding on, if any more bad news comes up in the political world, that would obviously be great for anyone shorting. But I do believe and I do hope that price comes up one more time, allows me to reload on my short and potentially, well, unfortunately, suck in some more people that are going to get wrecked because, market makers like to wreck as many people as they can. And I feel like a lot of late shorts have probably piled in, judging by that long-short ratio. We can confirm that with a look at the liquidation map. And you can see right there on the 1-day time frame, we have gotten a heap of late shorts. So if price manages to push to, 71.9 or 72-ish $1,000, we could have some massive amounts of shorts getting wrecked. And with that being said, I think that is enough for one video. And obviously, being a weekend session, even though price dumped quite a bit, our long liquidations are still fairly low. We only saw around, $200 million. And you can see pretty much on all of these previous I guess you could call them dumps. We were seeing, around through this March period, we're seeing about 400 million of long liquidations and 250 million or so. So I do believe that 200 million, although on the lower side, isn't that much lower, but still low enough to make me think that we will probably see another leg down. And whether we get this suckers rally or not is the $1,000,000 question. Anyways, thank you all for watching, and please like, comment, and subscribe. Goodbye.